We have May, June 2020, economics. So the first question says, okay, what's an example of the purchase of a consumer good? When we talk about consumer goods, we're talking about goods that are basically for consumption. So you are buying them because you want to consume. You are not reselling them. Goods that you buy because you want to sell them again, they are not consumer goods. They are producer goods.
Okay.
So here we have a farm owner buys a television, a farm owner buys additional land. If a farm owner buys additional land, that is for production. If he buys fertilizer, it's for production. If he buys an equipment, it's for production. So the answer is A. A farm owner buys a television. He needs a television to watch. So the answer is A. Question 2.
What is the function of the factors of production in an economy?
We said factors of production are resources that helps in the production of goods and services. So why do we need these resources? We need them to fulfill the wants and our needs. So the answer is A. Is it clear?
Yeah.
Okay. Question 3.
The diagram shows a production possibility curve PPC for an economy that can produce cotton cars. The economy is at point Q.
Yeah, when we talk about PPC, PPC means the maximum of goods and services that can be produced in a given economy. If all, that means in comparing, that means the maximum of goods and services. That means comparing two things that you can produce within an economy. If all your resources are fully utilized, that is what a PPC is about. So here we have the output, we have the production of cotton and the production of cars. So they said there is an improved technology that can only be used in the production of cars. So if there's an improved technology that can be used in the production of cars, what happens to the PPC curve? So the PPC curve will shift outward to the output of production of cars. It will shift outward from Q to X. Is it clear?
From Q to X, so
Yeah.
B.
It's B, yes.
Yeah. We go for the second question.
The fourth one, yeah.
Which topic is included in microeconomy?
So when I talk about microeconomics, microeconomics is the study of individual firms in the economy. The study of individuals, household, firms in an economy. And macro is the study of the economy as a whole. So the difference between micro and macro is that micro studies the individuals in the market, the firms in the market, the households. So that is demand, demand and supply. So here we have elasticity of demand. So it's for B. Is it clear?
Yes.
Because elasticity of demand is the degree of responsiveness between the quantity demanded of a product as a result of a change in price. So because we're talking about microeconomics, it's about demand. So go to question 5.
What aspect of demerit goods means they're overproduced?
If demerit goods are overproduced, it means that they have higher external cost. And you know what external costs are? The cost to the third party.
Okay.
Yeah.
The diagram shows market demand and supply curves.
Yes. So they said disequilibrium. What does disequilibrium mean? There's equilibrium, which means the quantity demanded equals to the quantity supply. That is equilibrium. That is the market equilibrium. Then for the market equilibrium here is at P1. We have P1, Q1, D1, S1. That's our equilibrium. So there's disequilibrium here, where that means there's a fall in equilibrium as a result of maybe changes in price or changes in quantity demanded or quantity supplied. So based on what we have here, at P2, the quantity demanded, at P2, we have the quantity demanded at Q2. P2 and Q2. But at P3, when the price increases from P1 to P2, do you see there?
Yes.
Let's say the price increases from P1 to P2, the quantity demanded will fall from D1 to D2. Because consumers will not be willing to buy. And at the same time, the quantity supplied is still here at S1. So the new equilibrium coming forward, because the price has increased, the quantity supplied will increase from S1. Instead of S2, there's no S2. It will increase, it's a rightward shift. So there's disequilibrium. Listen again. An increase in price from P1 to P2 would reduce the quantity demanded from D1 to D2. But the quantity supply curve should move outward from S1 to S2, right? But S2 will be upward, rightward shift, which doesn't go with the equilibrium here. It will go to 5. Do you get what I'm saying there? Do you get what I'm saying? It will go to 5. It will shift to 5. But normally it's supposed to be Q2 here. So the difference in equilibrium is between Q3 and Q5. Do you get the point?
So it's D.
It's D.
Yeah.
Do you get it or I explain again?
Yeah, I got it.
Okay. You go to question 7.
Lithium is an essential metal for the production of electric cars. Following a 10% increase in the price of lithium, supply increases by 15%. This led to a 5% increase in the price of electric cars. What is the price
Elasticity of supply for lithium. So here you have 3 information here, but the ones you need to use are the quantity and the price of lithium. So a lot of people will make mistake finding the price increase for electric cars. We're not talking about electric cars here. We're talking about the price of the raw material, which is lithium, and the quantity of raw materials, which is lithium. I think it's clear. So the price elasticity of the supply is Q2 minus Q1 over Q1 divided by P2 minus P1 over P1. So our P1 here will be 10%, and our Q1 will be 15%. No, our P1 will be 100%. Our P2 will be 100%. Our Q1 will be 110%. Our Q2 will be 115%. Is it clear?
Yeah.
So we assume that there's 100%. Because if there's no 100%, we wouldn't be talking about 15% increase. We wouldn't be talking about 10% increase. Do you get the point? So here we have our Q1. So our Q1 is 115. Our Q1 is 100. P1 is 115. Sorry, our P1 is 100. Our Q1 is 100. Our P2 is 115. Our Q2 is 110.
Okay.
No, our QP price is 110. Our price is 110. Our quantity is 115.
Okay.
Is it clear there?
Yeah.
So we say 115 minus 100 divided by 100 divided by 100 minus 110 divided by 100. So 150 minus 100 is 15 over 100. Now we have division, which is reciprocal, which becomes multiplication. Multiplied by 100 over 10. So 100 has cancelled 100. We have 15 divided by 10. 15 divided by 10 is 1.5. So the answer is C.
Okay.
I worked it out here anyway.
Okay. The wage of labor in firm increases, what is most likely affecting the production process?
If wage rate increases, that means it increases the cost of labor for work or for firms. But they cannot change it immediately until they can find a substitute for labor, which is capital, equipment, or machines. So that means in the long run, firms will start using capital instead of labor. So in the long run, so the answer is B. Is it clear?
Yes.
Question 9.
Which combination of influences would increase the level of borrowing by your household?
So when the level of borrowing would increase, if consumers have high confidence about the future, like I'm so sure I'm going to make money in the future, so I can borrow now. I'll be able to pay back. Or the interest rate is low. If the interest rate is low, that means if the interest rate is low, that means the cost of borrowing will be cheaper. So these are 2 reasons why business or consumers will be able to borrow money from wherever they want to borrow money from. So the answer is C. Is it clear?
Yeah.
Question 10.
The graph shows minimum wages as a percentage of one's wages in year 1 and year 2. Which statement is shown by the graph to be true?
So based on this graph, in year 2, women we're earning more than women that we're not in year 2. The earnings of women become higher, but it doesn't state that they were earning more than men. But what we can say is that in year 2, women were earning a higher percentage of men's wages than year 1. Is it clear?
Yeah.
Question 11.
People's income decreases, how the proportion spent on food and leisure likely to change?
If income decreases, you will spend less on leisure. You spend more on basic, like food, clothing, and shelter.
Okay.
So the answer is C.
So the table shows lots of fixed and lots of variable costs at different levels of output for a firm. At which level of output is average total cost lowest? Okay, so first, the formula for average total cost. Average total cost is fixed cost plus variable cost divided by output. Okay. So we check each one. The first one is 1,200 plus 1,200, which is 2,400 divided by 100. That's 24. B.
3,200 divided by 200, that's 16. C, 3,900 divided by 300, that's 13. D, 4,800 divided by 400, that is 12. So the lowest is 12. A is 24, B is 16, C is 13, D is 12. So the lowest is 12, D.
Okay.
Question 13.
The following information refers to a firm producing shoes. At which level of output does the firm maximize profits?
First, for profit is total revenue minus total cost. So if firm A produces, let's say firm A produces at 100 units, makes 300 profit. Firm B produces 200 units, make 400 profit. I'm saying the difference between total revenue and total cost here. 300 minus 100 is 300. So for 100 units produced, there's 300 profit. 2,200 minus 1,800 is 200. 400. So for 400 profit, 200 was produced. 3,000 minus 2,700, that's 300. So for 300 units produced, 300 was made as profit. And the last one is 3,400 minus 3,200, which is 200. So for 400 produced, 200 was made. So the maximum profit was at B. 200 was produced, 400 was made. That's the maximum. The rest are 300, 300, and 200. Is it clear?
Right there.
Number 14.
What is most likely to lead to an improvement in labor productivity in an industry?
So for labor productivity to improve, it needs investment in capital, like equipment. When you give workers equipment, when you give them machines that they have to use, they will increase their productivity. So the answer is A. Question 15.
How is the government most likely to prevent the growth of monopolies?
We already said monopoly is a market structure that allows just a producer of goods or services in an industry. Okay, so for government to stop this or reduce monopoly, because monopoly, one of the characteristics of monopoly is barriers to entry. So government has to reduce the barriers to entry.
So it's D.
The answer is D.
16. What is not included in public expenditure?
When we talk about public expenditure, we're talking about government spending. So government spending is interest payment on government borrowing, is government spending. Investment in defense by the central government is government spending. Subsidies to bus companies from local government is government spending. Capital spending by firms is for the firms. So it's a private cost. So it is A.
17. When is the budget described as balanced?
The budget is balanced if if expenditure is equals to revenue.
Okay.
So the answer is what? C. If government spending is equals to government revenue.
Okay.
18.
The government wishes to increase economic growth in its economy. What would not be likely to achieve this goal?
So if government wants economic to grow, first, they could encourage bank lending, because if government encourages bank lending, it increases investment. For lower interest rate, if government reduces the interest rate, it makes the cost of borrowing to be cheaper. People will be able to borrow and invest. Economy will grow. Subsidies will make the cost of production for goods and services to reduce. Firms will be willing to produce more. Output will increase. Economy will grow. So the answer is C, because if there's increase in sales tax, people will not be able to buy more. Firms will not be able to sell more. Revenue will fall. Output will fall. Economy will go in decline. So the answer is C. Is it clear?
Right. 19.
So I wrote 18 before 17. Okay, okay. Question 19 now.
The government redistributes income more evenly. What is most likely to increase?
Yeah, if there's redistribution of income, that means government wants to reduce the gap between the rich and the poor. This makes a lot of people will have income, a lot of money to spend. At that point in time, the purchasing power of firms will increase. Purchasing power of individuals will increase. If purchasing power increases, demand in the economy will increase. It will lead to demand pull inflation. So the rate of inflation will increase.
Okay.
So the answer is D.
20. The table shows selected indicators for the labor market of an economy in 2014 and 2018. According to the table, what is the most likely type of unemployment in 2018?
In 2014, the total labor force was 30 and the same as in 2018. In 2014, the employed workers were 25. It increased to 28, which is good for the economy. Long-term unemployed were 1. It increases to 2. Employment in manufacturing was 4, it reduces to 2.
Okay.
Employment in services was 13, it increases to 16. So the problem is between long-term unemployed and employment in manufacturing. But based on what we have here, the employment in manufacturing reduces significantly. So that means there's a problem with structural unemployment. And what is structural unemployment? Structural unemployment arises when there's unemployment because of a shift in demand in an economy. So, and when you talk about shift in the economy, that means the industry sector, the manufacturing sector. So if unemployment increases in manufacturing sector, it is what? Structural unemployment. So the answer is D. Is it clear? Let me quickly explain cyclical. Cyclical will be as a result of a reduction in the aggregate demand in the economy. Frictional. Frictional unemployment is an unemployment. It's just the time frame between now that you are leaving a job to look for another job. We call it frictional or temporary unemployment. For me to leave a job now, I become unemployed. But the time frame between me leaving this job to get a new job is called frictional. It is temporary. And for seasonal, it means I won't have a job for a specific time within a year. That means, oh, maybe during rainy season, we don't have jobs. Or during summer, we don't have jobs. That is seasonal. Is it clear?
Okay. 21, what may directly cause economic growth?
Economy will grow if resources are in high levels. If you have high resources, economy will grow. Unemployment will mean that there are still some resources that are not used. That means we have some resources that are not employed, which it can be labor, it could be capital, it could be enterprise, it could be raw materials. Taxation would increase costs for firms. Firms would not want to produce. Taxation could also reduce spending in the economy. So it's not going to make economy to grow. And high imports means the economy is not growing. You are bringing more from outside. It means your economy is not growing. Is it clear? So question 20. So the answer is B. Question 22.
What would now be required in the construction of an index of consumer price?
So for consumer index, we use the base year, we use the items, and we use the range of items. So what we're not going to use for calculating price index is the wage level. It's not part of it. So for the price of, when you are calculating your consumer price index, you use the base year. That's the year which you are calculating for the last year. You use the items, the food basket. That means, is it goods or services? But you don't talk about wages in consumer price index.
Okay.
23.
Table gives information about the economic indicators in 4 countries. What may be concluded from this information?
Based on this information, the interest rate, let's go to the interest rate. We have our inflation rate. Countries with high inflation rate like country X and country Y, they have high rate of interest. Country X has 3.7 inflation rate. They have high interest rate of 8.7. Country Y has 3.6 inflation rate. It has 7.3 high rate of interest. So based on what I have here, the country with high inflation have higher interest rates. So the answer is A, 23. 24.
What distinguishes a more developed country from a less developed country?
A developed country has high real income.
C.
D.
25. An additional 700,000 UK children and
Pensioners
pensioners
fell into relative poverty. When talking about, there's difference between absolute poverty and relative poverty. The difference is this: for absolute poverty, it means an individual in an economy is unable to afford the basic needs, like food, clothing,
and shelter.
That means basically we say an individual that cannot afford to spend $1.5 a day is in absolute poverty.
Absolute.
For relative poverty, it means certain percentage of people within an economy have few amount of money to spend than others.
Yeah.
That is relative poverty. Is it clear?
Yeah.
So here, what would cause relative poverty to occur? Relative poverty would occur if government reduces the benefits they give. Because pensioners have social benefits, You children have social benefit. They are, we call them students are economically inactive. They are economically inactive. Pensioners are economically inactive. Children are economically inactive. So governments have to, give them social benefits. So that will allow them to be able to spend. But if government stops giving them, it will reduce what they spend. Is it clear? Yeah. So the answer is D. I think I told you now what pensioners and children are. They are economically inactive population.
26, with changes usually result in a country develops and is able to provide the health care and good living conditions.
So also question 26. Yeah, if good living conditions, free health care, this makes that the birth rate will fall, the death rate will fall, productivity will rise. The answer is A.
Okay.
Yeah.
Okay. What is quota in international?
Quota means you are putting a limit to what can be imported to a country.
That's C.
Yeah. 28.
28, many low-income countries rely on exports of raw materials such as coffee or iron ore to earn them foreign currency.
Foreign currency. So the problem about earning foreign currency is that the prices of raw materials fluctuates. It's not stable. Sometimes they increase, sometimes they fall. It depends on the number of countries that have those raw materials. So if there's increase in raw materials, that means the supply of raw materials is increasing from different countries. The prices will fall. Yeah. If it reduces, the prices will rise. So it is fluctuating.
That's
D.
Okay. 29, what is included as part of the current account of the balance of payments?
We're talking about the current account balance of payment. Balance of payment is the record. I'm giving you the meaning of balance of payment. Balance of payment is the record of a country's transaction with the rest of the world. And what do countries transact with the rest of the world? Trade in goods and services. So trade in goods and services is called balance of trade, BOT. So your BOT will give you your BOP, which is balance of payment. So the answer is D.
30, the table shows confidence in Japan current account balance in trillion yen for 2011 and 2012, which balances improved between 2011 and 2012.
So, based on this, the improvement is in the secondary income. Why? Look at the balance of goods in trillion. It fell from negative 1.1 to negative 5. That's the deficit. Balance of services fell from negative 1 to negative 2. That's deficit. Balance of primary income was 14. It fell to 13. That's a negative. But the balance of secondary income from negative 1.11 fell to negative 1.02. So that's an improvement. Do you get it?
Yeah.
So the answer is D. Okay. Clear? Yeah.
For today?
Yeah, sure.